Today, we're going to be talking about government shutdowns and how long-term investors can look at these headlines around the government and around the shutdowns and think about their portfolio for making better long-term decisions. Okay, so let's get started. This chart here is going to give us a history looking back into the 70s on how the markets have performed during government shutdowns. And we're going to walk through a few different points and talk about a little bit of fiction that I've heard and then go over some facts. And I think the last 40 years gives us some pretty good data around establishing some facts and some history around how the markets have performed during government shutdowns. So the first thing that I hear around government shutdowns, or at least I see in the news, is the way that the media talks about government shutdowns. It's almost like they never happen, or we haven't seen anything like this before. I've heard terms like unprecedented. And what is the reality of these government shutdowns? The reality of it is that they have happened over 20 times in recent history. So they're not happening every year, but it's pretty close. The government shutdown, in particular, as Congress becomes less and less aligned as far as do they agree on issues around budgets, it's going to be more common. And so it will continue to be part of the news and part of what long-term investors need to be looking at in the future. So these are not uncommon events. The government shutdown is not exactly as common as Christmas, but it's probably pretty close. Now, we've established that it's pretty common, these government shutdowns. Another thing that we should look at is, okay, well, if the government shuts down, my portfolio is going to do terribly. Right? I should anticipate a big drop in my portfolio. I mean, the government shuts down, right? That's got to mean bad things. If we look at history and we look over the last 20 or so shutdowns, what you can see is overall, the markets have not done poorly during government shutdowns. And so with the last 21 shutdowns since 1976, there have been 9 negative returns. Now, this is during the shutdown, and there have been 11 positive returns during the shutdown. And as you can see, most of the negative returns came from the 70s. If you went back over the last 10 or 20 years, the markets have primarily been positive during the government shutdowns. Now, there are no facts about the future, so I'm not saying in the future the market will be positive when the government shuts down. But this does give us some context that just because the government is shut down and there are issues that need to be worked out on the budget, it does not mean that you should anticipate your portfolio necessarily being down dramatically. Which leads us to our third point, which is government shutdowns or discussions around government shutdowns should lead me to do something either during or ahead of a government shutdown, should lead me to react as an investor so that I can prepare myself and get defensive. Just looking at these other 2 points, which is these are not uncommon and these do not have a material impact on your portfolio in the short term and in particular over the long term. This is not a reason to make any changes in your portfolio that you wouldn't make otherwise. And so I've talked about this in other videos. If you were going to be making a long-term change in your portfolio, there may be a change in your long-term plans or your long-term expectations for future returns of your portfolio. But these types of decisions should not be made because news is coming that Congress didn't agree on the budget. And so going back to the top 3 issues, which is government shutdowns are not uncommon, they do not have a material impact on your portfolio, and they should not be a reason to make a seismic shift as a long-term investor. Hopefully can make the news a little more palatable. I hope you found this helpful. And as always, thanks for investing your time with the Personal CFO.